Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial filings of Gulf Resources, and let me tell you, it's going to be a wild ride. There are Saltfields, natural gas, and a lot of accounting, so buckle up. Scroll level of energy vegetable building. Scroll, if Scroll Resources says it's a manufacturer of bromine and crude salt, natural gas, and some chemical products used in oil and gas exploration. All their sales so far have been inside of China. Since all Gulf Resources business happens in China, the Chinese government could really change how they do things. Recent statements hint they might be taking a closer look at companies listed overseas, especially regarding investments in China. This could limit the company's ability to sell its stock and potentially make the stock price fall. There are also new rules in China where companies selling stock overseas need to make special filings, but Gulf Resources thinks those don't apply to them because they are already listed. It's a wait-and-see situation. There are also some fresh regulations about keeping important financial papers inside of China. If Gulf Resources doesn't follow these rules, they could face fines or other penalties. Now, about how Gulf Resources moves money around. If the company wants to pay dividends, they will first move the money to their Hong Kong company, then to the parent company, and finally to all the shareholders. Something that has been concerning a lot of foreign companies listed in the US is the Holding Foreign Companies Accountable Act, or HFCAA. Basically, if US regulators can't check the company's accounting books in China, it could get kicked off the stock exchange. Back in 2017, Gulf Resources had to shut down its factories because of stricter safety and environmental rules. Some factories were closed for good, while others were allowed to reopen after making improvements. In April of 2022, they created a new company specifically for crude salt. This was because the government now wants bromine and crude salt businesses to be registered separately. Their business is divided into four main parts: bromine, crude salt, chemical products, and natural gas. Bromine is a chemical used in flame retardants, medicines, and more. Crude salt is used in the chemical, food, and beverage industries. Chemical products are used for oil and gas explorations, and natural gas. Most of the bromine and crude salt comes from Shandong province. In June 2024, they made some deals to buy more crude salt fields. They agreed to pay with a mix of cash and company stock, with the deals closing in February 2025. In April 2024, the company received a warning from Nasdaq that they were late in filing their financial reports. After submitting a plan, Nasdaq gave them more time, but then another warning came because they were late again. Thankfully, by October, they had filed all the late reports and Nasdaq closed the matter. But the company wasn't out of the woods yet. In November 2024, Nasdaq sent another letter saying that the company's stock price had fallen below 1,000 and they had until May 2025 to get it back up. Gulf Resources is trying to get more bromine and crude salt by finding new resources in Sichuan province, but ran into some issues with the local government, including needing to establish a joint venture. As for the chemical products division, the government told them to move their chemical factories in 2017. As of late 2024, they had incurred over $45 million in relocation costs. Now let's get to the numbers, the financial data. For the year 2024, their net revenue was $7.6 million, a massive drop from the $30 million the year prior. This was mainly due to lower sales in the bromine division. The cost to make that revenue decreased by about half, a nearly 50% drop. Unfortunately, the drop in revenue is so great that this results in a gross loss of $7 million versus a profit of almost $2 million the year before. That's a 463% drop. Now, it's not good news, but it is important to know that there's still almost $9 million in direct labor and factory overheads that are due to the plant shutdown. General and administrative expenses went up by 24%. This all resulted in an operating loss of $21 million. That is a 79% jump in operational loss. But get this, the loss before taxes is nearly the same as last year, 57.2 million compared to 58.2 million. This is mostly thanks to writing off property and equipment in 2024. Net loss was 58.9 million. This is in line with previous trends, but the loss of revenue will surely concern investors. They spent a lot of money on a flood prevention project. This may help prevent damage to the company. They had $10 million in cash at the end of 2024. This is a big change from having over $72 million in 2023. The cash flow used in operating activities is about $0.68 million. It's worth noting that Chinese regulations on foreign currency might make it difficult for Gulf Resources to use their revenues effectively. And of course, it's worth noting again that their common stock may be delisted from the Nasdaq because of the Holding Foreign Companies Accountable Act. Looking at the big picture, Gulf Resources is facing some serious challenges. The sharp drop in revenue, especially in the bromine segment, is concerning. The loss from operations is also a red flag, highlighting potential inefficiencies or market pressures. The ongoing issues with Chinese regulations and the potential delisting from Nasdaq add to the uncertainty surrounding the company's future. While they're trying to expand and improve their facilities, these efforts are costly and might not pay off if the market conditions don't improve. Overall, Gulf Resources looks like a risky bet right now. It really needs a major financial turnaround to become a financially safe prospect. Thanks for watching. If you enjoyed, please subscribe, like and comment.